Welcome to our latest update on the financial markets as of March 20th, 2025. Today we're diving headfirst into the belly of the beast, the key players shaking things up and making waves in this market. We're talking about the big kahunas, the movers and shakers, the ones who can move the market with a single trade. We're gonna break down their strategies, their predictions, and what it all means for you. Because in this market, knowledge is power, and we're here to give you the inside scoop. So buckle up because we're about to take a wild ride through the financial jungle. Let's kick things off with Stifel's chief strategist, Barry Bannister. This man has a reputation for being ahead of the curve, and his latest prediction is causing quite a stir in the financial world. This guy's got a nose for the market, and right now he's smelling a W-shaped recovery. It's a pattern that suggests a double dip in the market before a sustained recovery. That's right, folks, a W. Imagine the market taking a roller coaster ride, dipping down, bouncing back up, dipping again, and then finally climbing steadily.
I'm seeing a short-term bounce in the S&P 500 shooting up to 5,800. This initial surge is driven by optimism and a rush of investments. But hold your horses because I'm also predicting a pullback to around 5,500. This dip is a natural correction, a reality check for over-enthusiastic investors. Why the dip? Inflation, baby. Rising prices are putting pressure on the market, making it harder for companies to maintain their profit margins. That sneaky devil's lurking around every corner, ready to take a bite out of your returns. It's a constant threat that investors need to be wary of. But don't panic just yet. I've got a game plan. It's all about being prepared and having a strategy in place. I'm telling investors to diversify, diversify, diversify. Spread your investments across different sectors and asset classes to minimize risk. I'm bullish on value stocks, those diamonds in the rough just waiting to be polished. These stocks are often overlooked but have strong fundamentals. I'm also looking overseas to international markets that are ripe for the picking. Diversifying globally can provide additional growth opportunities. And don't forget about small cap stocks, those scrappy up-and-comers with a point to prove. They often have higher growth potential compared to their larger counterparts. Now here's where I'm throwing a curveball. It's important to stay flexible and be ready to adjust your strategy as new information comes in. I'm cautious on US growth stocks. These high-flying darlings of the market, I'm not convinced they can keep up the momentum in the face of rising interest rates. Those high-flying darlings of the market, I'm not convinced they can keep up the momentum. The tech sector, in particular, might face headwinds. I'm worried about rising interest rates putting a damper on their growth prospects. Higher borrowing costs can stifle expansion and innovation.
So, what's the takeaway? It's a complex market out there, and Bannister's W-shaped recovery is a wake-up call for all investors. Bannister's W-shaped recovery is a wake-up call. It's a reminder that the market is unpredictable and requires a well-thought-out strategy. It's time to play smart, diversify your portfolio, and keep a close eye on inflation. Stay informed and be ready to adapt to changing market conditions. Remember, folks, in this market, you gotta be nimble, you gotta be quick, and you gotta be ready to pivot when the winds change. Stay vigilant and proactive to navigate these turbulent times successfully. Hold on to your hats, folks, because things are about to get interesting. We're diving into the world of congressional trading, and let me tell you, it's a jungle out there. These days, it seems like everyone on Capitol Hill's got their fingers in the market pie. From senators to representatives, the trading frenzy is real, and it's happening right under our noses. The sheer volume of trades and the amounts involved are staggering. It's like a financial jungle where only the fittest survive. Take Representative Josh Gottheimer, for example. This guy's been on a trading spree, racking up 526 trades totaling a whopping $91 million in volume last year, and he's not alone.
We're seeing more and more members of Congress getting in on the action, buying and selling stocks like there's no tomorrow. But here's the kicker. They're doing it with insider information. They're privy to confidential briefings, economic forecasts, and legislative changes that give them a leg up on the rest of us. Now, some folks are crying foul. They're saying this is a clear conflict of interest, that these politicians are using their positions of power to line their own pockets, and they're calling for stricter regulations to prevent insider trading and level the playing field. They argue that the current system is rigged in favor of those in power, but others argue that these politicians are just savvy investors, that they're simply using their knowledge and expertise to make informed decisions. They say that restricting their trading activity would be unfair and unnecessary. After all, isn't it a free market?
So, who's right? It's a tough call, folks, but one thing's for sure, this issue's not going away anytime soon, and it's got everyone talking about the need for greater transparency and accountability in government. People are demanding answers and pushing for reforms. The debate rages on, with strong opinions on both sides. Some believe that allowing politicians to trade freely is a recipe for disaster, while others see it as a natural extension of their rights. As the calls for stricter regulations grow louder, the pressure is mounting on lawmakers to take action. Will they rise to the occasion or continue to benefit from the status quo? Only time will tell. But one thing is certain, the eyes of the nation are watching closely, and as the debate continues, the stakes have never been higher. The future of congressional trading hangs in the balance. So stay tuned, folks. This is one story that's far from over, and as always, we'll be here to keep you updated on all the latest developments, because in the world of politics and finance, there's never a dull moment. And it's got everyone talking about the need for greater transparency and accountability in government. Now let's talk about the veterans, the seasoned pros who've seen it all and lived to tell the tale. These are the traders who have navigated the tumultuous waters of the financial markets for decades, mastering the art of trading through sheer experience and resilience. These are the traders who've weathered the storms, ridden the waves, and come out on top. They've seen market crashes, bubbles, and everything in between. Their strategies are honed, their instincts sharp, and their moves calculated. And they're still making moves that are shaking up the market. These veterans are not just surviving, they're thriving, constantly adapting to the ever-changing landscape of the financial world. One veteran trader, who we'll call Mr. X for now, has just made a bold bet against Nvidia. Mr. X is known for his contrarian views and his ability to spot opportunities where others see risk. That's right, he's shorting the semiconductor giant, betting that its reign at the top is coming to an end. This move has certainly raised eyebrows in the trading community. Now, Nvidia's been on a tear lately, its stock price soaring as demand for its chips has skyrocketed. The company has been riding high on the back of its technological advancements and market dominance, but Mr. X sees trouble on the horizon. He believes that the current valuation of Nvidia is unsustainable and that the market is overlooking some critical risks. He's worried about increasing competition from rivals, especially in the burgeoning field of artificial intelligence. The AI sector is heating up and new players are entering the fray with innovative solutions. Veteran trader. He believes that Nvidia's rivals are catching up, developing their own powerful chips that could challenge Nvidia's dominance. These competitors are not to be underestimated, as they bring fresh perspectives and cutting-edge technology to the table. But Mr. X isn't just betting against Nvidia. He's also strategically positioning himself to benefit from the rise of a new contender in the semiconductor space. He's also placing his chips on a little-known competitor, a company he believes has the potential to become the next big thing in semiconductors. This company is quietly making waves with its groundbreaking technology. This company, which we'll call Phoenix for now, is developing cutting-edge chips that are faster, more efficient, and more powerful than anything else on the market. Phoenix is pushing the boundaries of what's possible in semiconductor technology. Mr. X believes that Phoenix is a sleeping giant, poised to disrupt the industry and steal market share from Nvidia. He sees Phoenix as a game changer, with the potential to redefine the competitive landscape. Veteran trader, he's betting big on Phoenix, convinced that it's only a matter of time before the rest of the market catches on. Mr. X's confidence in Phoenix is unwavering and he's putting his money where his mouth is. This is a classic David versus Goliath story, folks. The underdog taking on the giant with everything to gain and nothing to lose. The seasoned veteran going up against the industry giant. It's a high-stakes game, and the outcome is far from certain. And it's got everyone on the edge of their seats, wondering who will come out on top. The financial world is watching closely, as this battle could reshape the future of the semiconductor industry. Hold on to your algorithms, folks, because the robots are taking over Wall Street. We're talking about electronic market makers, those high-frequency trading firms that are reshaping the financial landscape. Electronic market maker. These firms, like Jane Street and Citadel Securities, are using cutting-edge technology to execute trades at lightning speed, leaving traditional banks in the dust. They're like the cheetahs of the financial jungle, while the banks are lumbering elephants. And they're not just trading stocks anymore. They're moving into bonds, commodities, and even cryptocurrencies, expanding their reach and influence across the financial markets. So how are they doing it? Electronic market maker. These electronic market makers are leveraging the power of artificial intelligence, machine learning, and big data to gain an edge. They're analyzing massive amounts of data in real time, identifying patterns and trends that humans would miss. And they're using this information to execute trades with incredible speed and precision, often completing thousands of transactions per second. This has led to concerns about market manipulation and unfair advantages. Electronic market maker. Some critics argue that these firms have an unfair advantage over other market participants, that their high-speed trading can distort prices and create artificial volatility. But proponents of electronic market making argue that it has made the markets more efficient and liquid. They say that these firms provide much-needed liquidity to the markets, making it easier and cheaper for investors to buy and sell securities. These developments underscore the dynamic nature of financial markets in 2025, influenced by both traditional and emerging trading entities. From Bannister's W-shaped recovery to congressional trading controversies, veteran traders' bold bets, and the rise of electronic market makers, the financial landscape is constantly evolving. It's a wild ride, folks, but it's also an exciting time to be an investor. With so much innovation and disruption, there are endless opportunities for those who are willing to embrace the change and adapt to the new realities of the market. So stay informed, stay agile, and stay ahead of the curve. Because in the world of finance, the only constant is change. Stay tuned for more updates and insights.